Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. Commodities are on a roll. In the last 2 years, I've been telling you it's all about materials and things that you can hold. Digital assets are not as important as rare earth minerals or as oil or as things that countries are going to be hoarding. Uh, I'm recommending buying natural gas tonight. It's probably the hardest security to trade. It makes crypto look easy. I would say natural gas and silver are two of the hardest, but tomorrow's the CPI number and it's going to be red hot, white hot, red hot. I don't know how the market's going to react to that. I wish I wasn't making this recommendation with that in front of us because how the market acts on that is unknown. It could be a really hot number, meaning that the Fed's going to have less room to cut rates. Um, the Fed can't cut rates anyway because the bond market has already taken the lead. And remember my bearish call on treasuries, and that I thought we were in a multi-year rise in interest rates. And if you had a mortgage, it was time to refinance about a year ago. All of that is going to put pressure on the Fed not to do anything. And I don't really care because, again, the market can react any different way. And the markets dictate what the Fed is going to do anyway. They're already ahead of it. They're already reacting. All that to say, you know, nat gas is one of the last commodities that hasn't moved yet. And again, it scares me to death. Um, as a CMT, chartered market technician, traded for over 35 years, still do a newsletter for a firm in Chicago, investment firm. And this is the hardest security to trade, but the reward to risk is just too much to pass up. By the way, so I don't forget, Antero Resources, one of my buy recommendations, which has been struggling, should be a beneficiary of higher natural gas prices if we get those. And again, I can be wrong, but if I have 8 or 9 picks and two of them don't go our way and seven do, you're way ahead of the game. So anyway, this is a 35-year chart on natural gas. You've probably never seen that. You probably have no concept of where natural gas is on a historic basis. Well, it's kind of pretty low. You're down at 2.9%. The high was 16. The low back here 35 years ago was $1. And this was a bullish trend. You can see the bullish trend lines. Then we got into a bearish trend. You can see the bearish trend lines going down. And then you can see a lot of chopping around. And you just saw, it kind of fading. And when we hit these two lower lows, we got higher lows on our relative strength index, flashing a caution sign, beware a change of trend from down to up. But this was really telling. This was back in 2022 where we actually had a 5-wave advance. So again, as a market technician, and you've heard me talk about the fact I'm a pattern recognition person that looks for big base breakouts. Well, this is not that. But I'm digging into my toolbox and I'm pulling out the Elliott wave theory, which believes that trends or cycles go in waves of 5, with 1, 3, and 5 in the direction of the bigger trend, and 2 and 4 are counter trend reactions. That's why people never get the market right. So they get faked out on these things. So this was the top of wave 1. And usually wave 2 are really deep retracements. So we'll have a 5-wave advance eventually all the way up. And so wave 2s are usually really deep because people are still mentally bearish and they don't want to trade natural gas like me, and they don't, so this was the bottom of 2. And I think we've seen a 5-wave advance starting into our big third wave. And that's really telling. So we got 1, 2, 3, 4, and 5. So this is the top of our little first wave. This is a big first wave. So we're going to have five waves within this third wave. And now we've gotten a three-wave correction on this small wave one. I know that's a lot, but that's what it is. The big picture, though, is that we're entering the third of a third wave. And those that have followed me for a while, this is the sweet spot. This is what you look for. These are the biggest movers. Third waves are the most powerful, the most profitable, and we want to get in front of it. So we should be going into a third wave a third wave of a third wave, and this probably is going to top our previous high of 1570. It's definitely going to exceed 10 if that is in fact where we're at in this wave count. So, which that would be I don't know 200% or something. So 250% or something. So that's where we're at on this. Let's take a closer look. Okay, this is a weekly chart. And so within this new third wave that we're looking at that should take us to new highs, you can see our five wave count and our first small one wave. So just to give you some bearings here, here we go up here, small first wave. And here we have one, two, three, four, a little bit of overlap here, Elliottian, uh, um, you know, uh, Elliottian people would say, oh, that's an overlap, but anyway, we're going to give it the benefit of the doubt here. It's a slight overlap. And then our fifth wave here that completed our small first wave. And then we had an A, B, C, a flat, and we got down to the bottom of two. Coming into that low, we have what's called an ending diagonal. And according to Edwards and McGee, I think they were in the 50s. It's kind of the Bible of technical analysis. And if you like this, it would be something to read. Um, and so we had the ending diagonal pattern, which is found at the end of major market moves. And it's usually swiftly reversed. And you usually would at least get up to here to recoup that ending diagonal. And then we see what happens. So we kind of have a bullish channel here now, and things seem to be going in line. So this is a weekly chart. Each one of these candlesticks represents a week of price action. Now we're just going to look at this. And here's our ending diagonal. And then we had a gap down, so people just throwing in the towel. And then we had a gap up, and it's a uh, evening star pattern or an island reversal pattern, whatever school you're from. So that's usually, a pretty big deal. It's a 3-day pattern, and it kind of got us going. So here's where we're at. Up big today. You can see all the confluence of moving averages coming beneath our price action. So another day or two of upward price, these lines are all going to touch. And at that time, this is going to pause its advance, either going to sit there for a couple of days, a type 1 convergence. What we've seen a lot of lately are type 2 convergences where prices come back to that convergence. And if they hold, it promises a new higher high. So then we get the next leg up. And if this is a third of a third wave, you're not going to get a whole lot of buying opportunities. So that is that. So now let's look at the ETF that you need to buy, or unless you trade futures, I don't need leverage. I don't need all that. I just want to get the direction right. So UNG is the ETF, and we're going to take a look at that security. Now, with USO or OILK in oil, which you've heard me talk about, they don't track exactly either. And this one doesn't either, but it's the best you got. And so we had our ending diagonal. We have a small inverse head and shoulders pattern right here. And we broke out of that today kind of convincingly. And the price projection's around 12 or 12.25 or something like that. But that would get us going. That'll get us going. That'll get all our moving averages together. If we get to 12.25. What is that? That's, well, I guess that's about 10%, 9% advance, something like that. That's not the big picture though. And so that's where we're at with UNG. I'd be buying it. I don't have a stop. I certainly wouldn't want to see it break 10. That would be pretty disastrous. So again, buying these before they take off, really take off, then it's really hard to get involved in them. So I guess this would be kind of a pattern recognition that we had an ending diagonal and we had a small inverse head and shoulders pattern, which makes it nice. So tomorrow's going to throw a lot of volatility into things, but if it's up 5% on the open, I wouldn't buy it. I mean, I'd buy a little bit maybe, but when all these moving averages come together, I'd get a starter position, and then you'll see prices possibly come back to that convergence, and then you have the opportunity to kind of load up on it. So um, that's kind of the recommendation right here. Seasonality is also in our favor, just getting into May, and so we still got a good month before and again, seasonality is just tendencies. It doesn't have to follow seasonality, but you like it in your favor. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Tell your friends, neighbors, and family. I had, today, one of the bullish recommendations, silver, platinum, a lot of good things. And you should watch my channel and tell your friends. Thank you.